So, as we talked about last week, the Fed hiked rates another 0.25%. That being said, the market seems to think this will be a last rate hike. In fact, the market is saying that there's less than a 50% chance of rates going up again this year. I think the highest is like 36% or something, that there would be a hike in September or November. Now, over 50% of the market is forecasting a rate cut by March of 2024. Now, as we get new data, of course, those numbers shift and change. But as of the last Fed meeting, this is how the market reacted to the Fed's words. So now we did talk about the Fed speak, that his tone was going to be neutral, wishy-washy at best, and that's exactly what he delivered to us. So Jerome Powell basically kind of said, like, we could hike rates this year, but we could also pause. That was generally the discussion. It was like, maybe not. That every single thing he said, he basically dodged every single question and gave a very wishy-washy answer. That being said, he did say that the labor market is showing signs of cooling, and that based on history, we anticipate that there will be more cooling ahead. So that we've already kind of verified, but he's actually finally acknowledging this. He did say that there are likely no cuts for this year, which we already knew. The market is forecasting that to be Q1 or Q2 of 2024. And he did also say that inflation is expected to hit around 2% in 2025, and that he is absolutely not going to keep increasing rates until we hit that number, because obviously the data is lagging. He did basically acknowledge the lag, and that he's not planning on hiking rates, continuing to hike rates until inflation hits 2%, which is a good thing because you just never know, right? So that being said, we did get GDP last week. It came in better than expected, which is why I think treasuries are up about 25 basis points across the board. Rates are certainly up this week. In fact, our most competitive lender was right about 6%, and they are now 6.25%. So that's pretty much indicative of the entire market. Job postings are down, which is something that we've been seeing, and I anticipate that we will continue to see job postings going down. Home sales are also showing down. This other report came out. It's called the SLOOS survey. I don't know if you've heard about this, but this is the Senior Loan Officer Outlook or Opinion Survey. That's what it is. Senior Loan Officer Opinion Survey. And what that does is they go out and they interview the top senior loan officers across the country and ask them what the landscape looks like for, credit for consumers. So basically across the board, they have acknowledged that commercial real estate lending has tightened considerably in July. Residential mortgages have tightened considerably, except for government financing. So Fannie Mae, Freddie Mac, FHA, VA, those ones have tightened some, but not as much as the rest of the market, like non-QM, jumbo, super jumbo, all of those loans. We do continue to see this credit tightening, like we've discussed, that we're going to continue to see this for a while because banks are having to increase their capital requirements in anticipation of any new laws that will be coming out for financial institutions. That continues to be debated. We will find out soon, but of course, nobody wants to be left not complying with the new regulations when they come out, and there's just no telling on what they'll do. So everybody is preparing for that. They're also preparing for the commercial real estate debt crisis. All of these commercial properties are losing value, and they are coming up on these refinances, or their rates are set to adjust, and a lot of them are not going to debt cover. We are also starting to see signs of that happening with syndicators. We've been talking about it for a long time, but the rubber is starting to hit the road because a lot of these syndicators relied on adjustable rates. So at this point, they've reached enough of these rate hikes that they're starting to get to break even or less than break even. And when they have to refinance, they're either going to have to do a capital call, or they're going to have to fire sell. They're going to have to negotiate some sort of a modification with the lender. So there's going to be a lot of adjustments happening here with a lot of syndicators who got this bridge debt and they just couldn't get their property turned around in time to refinance at the speed of rates going up at an unprecedented rate. So we are going to see more of those issues coming up. They've been happening, but it's definitely starting to happen more. A lot of people have maybe another 12 to a little less than 24 months left on their loans before they're either due or adjusting again. So this is something that we need to watch, and another reason why lenders might be a little bit more conservative about lending, because they're just not sure what's going to happen with some of this debt on their balance sheets. So any good news? I am seeing a pickup in activity in terms of loans and financing, which is a really good thing. I do see people trying to make deals happen. Now, the conversations that I've been having with some of my lenders and what we've been seeing also is that a lot of deals are falling apart later in the game. So for example, people in purchases are starting to back out at the 11th hour, or when you're deep into the transaction, obviously because of the market uncertainty, questions about rates, whether or not they're gonna go down as soon as they think. There's just a lot of questions, not to mention that you add this new layer of all of the regulations that are coming, that have come online for landlords, and more that are being proposed on the ballot. So there's kind of this convergence of like stuff happening where landlords aren't sure about the local laws, like what they're going to be required to do for tenants. They're getting overarching, not to mention that Joe Biden is now getting involved in this. They're talking about trying to do some, national regulation across the country to help renters. So that's coming, plus all of this economic uncertainty. So it is just creating a lot of uncertainty in the market from multiple angles. And so it is making buyers, it's like buyers are itching to get off the sidelines and buy stuff, but they're also feeling really uncertain. And what happens when you're uncertain? A lot of times you don't do anything, right? So you decide not to act because there's uncertainty. What I can tell you is there is absolutely financing available in San Diego, in California. We have some of the best financing available. Yes, our pool is smaller and it's ever changing. Rates are going up, they're going down, lenders are coming into the market, they're going out of the market, they're changing guidelines, all kinds of things. But there is financing available. You just have to look really hard, which is why mortgage brokers are super valuable in this time, because a lot of the usual suspects that you're used to going to are either not lending, or they're a heck of a lot more conservative, or they're not competitive in terms of rates and terms. So now is the time to get quotes and also stay on top of those, because like I said, from week to week, you just don't know what's going to happen. Your bank might merge, they might get bought, they might change their mind, they might, there's a lot of things that could happen when you're getting quotes on your deals. So you definitely want to make sure to keep those refreshed. So if you got a quote last week, you better get it refreshed this week, because terms are likely different if you haven't moved already. So have a fabulous week, everyone. I hope to have some more good news for you next week on what kinds of deals are getting done. But the good news is things are moving. People are transacting. As with everything, you just have to pick your hard. So when the market was really hot, the hard was getting your offer accepted because you had so much competition, but you also had really good rates and super competitive financing. In this market, there's not as much competition, but it is more difficult to find a deal and get it financed. So no matter where you are in the market, no matter what market cycle you're in, there are going to be challenges and difficulties. You just have to decide what it is that you're willing to live with in terms of risk, competition, all of that kind of stuff. So now's a good time to take a look at your strategy, adjust your strategy based on the market, and figure out a path forward, or decide that you're going to sit on the sidelines and wait a little longer. So it is all up to you and your risk tolerance. But have a fabulous week. If you have any questions, feel free. Any deals that you're looking at, it takes me like 10 minutes to size a deal and look at it. I've been doing it every day for 20 years. So anyways, have a fabulous week, everyone. Thank you so much for listening, and I will see you next week.